Today on the CEO Barbecue, we're looking for gold in Nevada together with Viva Gold. For a bullet point summary of this and all other CEO interviews, please go to researchtalks.com and subscribe to our free weekly newsletter. The company you're about to hear from has not paid us for the production of this interview, but this interview is still intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm. All conversations are general and impersonal in nature, and they contain forward-looking statements. I'm not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital is at risk, and also visit setterplus.ca where you'll find the company's official filings. If you're not 100% sure you understand all the biases and the disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, the focus for Viva is the Tonopah Gold Project in the Walker Lane Trend of Western Nevada. Tonopah is a near-surface oxidized epithermal gold-silver system with mineralization in veins and breccias within a broader halo of low-grade disseminated mineralization. Now, this is not a big asset, and the updated 2025 resource shows about 500,000 ounces of gold, 1.7 million ounces of silver. That's in the measured and indicated categories, and then also a bit of gold and silver in inferred as well. That's all constrained within a conceptual open-pit shell at 0.15 gram per ton cutoff. This is a PEA stage asset though, but it is in Nevada, and it's a proposed open pit mine with a CIL, so it's your carbon in leach mill, and the heap leach circuit for the lower grade stuff as well, which in this part of the world could pose water challenges. So that's definitely something I'll be asking James about later on in the conversation. Now, Viva is listed as VAU on the TSX-V, where the average 3-month volume is about 170,000 shares. The stock's 52-week high is 20 cents, and its 52-week low is 8 cents. With a market cap of just over 26 million Canadian dollars and just over 145 million shares outstanding, today this is an 18-cent stock with a 50 and a 200-day moving averages at respectively 15.4 and 14.5 cents, which means the stock is now trading above both of them, indicating positive momentum. Moving on to the share structure, the public float is estimated by the company at 45%. There's Dundee Corporation in there owning 20%, management owning 4%, and the remaining 30 or so percent is being held by institutions. There are close to 39 million warrants outstanding, just over 1/3 of which expire in March of next year. They do so at 23 cents. And another almost third expires in December of next year at 18 cents. And then there's more at 22, 17 cents well into 2028. There are also 10.5 million options, adding up to 195 million fully diluted shares, meaning an increase of about 34% in shares outstanding could happen if all the dilutive securities get exercised, which would then result in about a 25% ownership dilution if, and that's always a big if, but if all dilutive securities get exercised. And of course, none of this accounts for potential dilution down the road, which is not unlikely given that this is a pre-revenue company that operates in a capital-intensive industry. Talking about capital, I'll now go through their latest financial statements, which show me the numbers as of July 31st, 2025, which do keep that in mind. That's about 5 months ago now. At the time, the company had in total just over 1.1 million Canadian dollars in current assets, most of which in cash, and there has not been a capital raise to my knowledge since. In terms of liabilities, there was about 50 grand in account payables and about 350,000 in non-current liabilities, but those are your asset retirement obligations and the deferred lease income. So that's not money that's due immediately. Moving on to the P&L for the 9 months that ended on July 31st, the total amount recorded as non-exploration expenses for the period shows up as about $550,000. So that's an average of about $60,000 a month, with investor relations being the largest chunk of that expense, costing them about half of that money. As to the exploration, about $1.5 million went into the ground over the last 9 months. So that's about $163,000 a month on average, with the largest chunk there being drilling itself. So about 1/3 of the money was spent on drilling. As always, I've got two ratios here for you. The first one is the exploration to administration ratio, and that's at about 3 to 1, meaning almost 3 times as much money was going into the ground as what was spent on running the company. In percentage terms, that's about a 75 to 25% ratio for exploration to administration. And then I've also got the drilling to marketing ratio here. That was about a 2 to 1. So almost twice as much money was spent on drilling as what was spent on marketing. Again, though, this is a PEA stage asset. As always, I would also like to remind you that the financial situation for exploration businesses can change quickly. So please visit setterplus.ca and look for the up-to-date numbers yourself. And of course, stick around for the latter part of the conversation where James and I will be talking money as well. Now, for this to actually become a conversation, though, I'm going to have to shut up already. And James, I'll give you the word here. But first of all, thank you for sitting down with me today.
Well, thank you. Pleasure being here.
Pleasure is mine. And since this is your first time on the barbecue, we're going to have to go through the smell test first before we actually get into the barbecue, which is going to intend to understand more about what the incentives and the track record of management are. But just before that, James, the first thing that I noticed after I met you in Zurich is that your stock price is lagging the move up in gold, as well as the gold price itself, as well as the GDX and the GDXJ, that they are outperforming gold, so lagging that too. How come? What do you think is happening here? Why is the market not giving you the value that you think you deserve?
I believe it's probably due to the size of the asset. And, I am not a promotional individual, so I don't sit there and wave my arms at millions of ounces. We tend to base our numbers solely on fact. I do believe ultimately that this project will be a 1 million ounce project. But what we do have that's really key is a well-drilled core of mineralization that'll justify the construction of a project. And what we do have in the US at this point in time is a very unique window of opportunity for permitting. And so, do you continue to drill, or do you stop with a well-drilled core and go to permitting? It's probably the best window of permit opportunity that I've seen in the last 20 years in this country. And get a project into permits. Permitted assets in the state of Nevada draw a huge premium over unpermitted, typically a factor of about 3 to 1. So where do you build the greatest value for your shareholders at this point in time?
Yeah. That's something that I do want to talk about, specifically permitting. And again, as I mentioned, water is going to be a big part of is a big part of the list of questions that I've gotten here for you, James. And what you said here opens the door nicely for a couple of things down the road as well. But I'll be starting off with yourself and your track record. Who are you? And have you made more money for shareholders than you've spent during your career so far?
Yeah, I cannot honestly say I have. My background, I'm a mining engineer and mineral economist by training. And, I started my career back in the late 70s, was immediately moved overseas where I ran operations. My first job was an underground engineer in Greece, of all places. It was an underground shrinkage stope mine. I went from there to Southeast Asia. And ran open pit operations for industrial mineral products. Had a mine in the Mekong River highlands on the Thai-Lao border, one in the southern Thailand, and I built a mine in Malaysia. So those were all export operations, made quite a bit of cash in those operations. I was then transferred to Canada. And I built a mine, was producing locally produced products under the national energy policy of Trudeau Sr. And I built a mine in the Yukon, one in Nova Scotia. We built a plant in St. John's, Newfoundland, imported ore to that one. But I was supplying the oil field drilling of bulk commodities for drilling muds. That was a lot of commercial experience as well as building experience in those different products. Um, After that, I spent time consulting. It was basically the 80s by that point, and doing a lot of feasibility studies for open pit heap leach mines in Nevada. Uh, Probably about a half a dozen feasibility studies there. A lot of the mines are still operating today. Um, so, I've wound up in the copper business after that, um, doing M&A work as well as positions as chief engineer, technical manager at some of the big copper porphyries in Arizona. Um, Went on from there to banking, structured mining finance with N.M. Rothschild and Sons, the London Bullion Bank, and then came out of that and moved into the junior sector. And since then, I've had four public companies. Um,
What do you have now? Is it do you currently hold any other executive or board positions within any of those companies, or I don't know, other companies?
yeah, I'm currently on the board of Solid Resources, which has zinc assets in Alaska and Peru. We've got a gold exploration project, very sexy one in South Dakota.
Mhm.
And then we've got additional copper moly and copper gold porphyry exploration assets in Colorado.
Yeah. So how much of your time would you say goes toward Viva? How many hours a week are you putting in?
It's the bulk of my time. I'm really the only employee of Viva. We structured this company, and that's why we have such a low overhead cost. We structured it with home office. The only office we have is the office in Tonopah. It's project office. And all of my people are contract people who work when we have cash to pay them.
Mhm.
And so they're all people who have worked for me on and off over the last 20 to 30 years. And so we have a great working relationship, and they like the way it's currently structured.
How many shares do you currently own of Viva, and what's kind of the average cost that you've paid for those shares?
I've got about 2.5 million shares of Viva right now. 2 million shares of that came about as restricted stock grants when I basically floated the company. Um, this Viva had been a capital pool company on the shelf on the next exchange, and I activated it by acquiring the Tonopah deposit and then floating it out onto the Toronto Venture Exchange.
Mhm. Yeah. So what was the average cost at the time?
Uh, it was kind of irrelevant because it was a shell company with a um, excessive valuation on a share market basis. That's not a relevant question.
Well, really, what I'm looking for here, what would be relevant is how much skin in the game do you have? How much of your own money have you actually put at risk here?
It, it's a lot of time,
Hmm.
and time is money. Um, I started this company in late 2017, and that's when it went active on the venture exchange. So I've been working this project along. We had a lot of stuff to sort out on it. And I started this company with 350,000 cash, and today it's worth over 30 million. So what has that time been worth? Um, it's been worth quite a bit. So that is my contribution to it, is seeing it along from square zero. It's my first zero-based startup of a company. There was nothing here before.
Skin in the game still remains important for me, for you and the team to know that everyone's properly incentivized, and total insider ownership is about 4%, which again is not all that high for a junior of this size. Is there an active plan in place to increase that for you or other insiders? I mean, I do see that you've been buying
Yeah.
some shares in the market recently, but is that something you'll be doing more of in the future, or how do you look at insider ownership?
Yeah, I mean, the way my board is a non-paid board, and they're incentivized through stock options.
Mhm.
That's how they get paid for their position. So when they do well, the company has done well.
Yeah.
And that's really your skin in the game. It's, time.
Well, talking about alignment and mentioning those options, I also want to know what drives Viva operationally. So, what are the KPIs or targets that determine that insider compensation, including the options and everything else?
Well, over the last number of years, it's been creating a resource at all. We now have about a 600,000 ounce total resource. And that was grown from when we picked up the property, the only declared resource was about 30,000 ounces. So that's gone up by orders of magnitude. We've completed our second PEA now. We've got a very strongly potentially viable project. And really, it's just the advancement of the project. We've got a substantial completion on a lot of the required environmental baseline study as well. And when I talked about permitting, you cannot initiate permitting without having those baseline studies completed.
Mhm.
And that's what many people do. They get through, they do a PEA, they do a pre-feasibility study, they say, right, we're ready to start permitting. And they're already 3 years behind schedule because they didn't do consecutive baseline study. And that's what we've done, and that's a matter of experience with the US permitting process. So we're already years ahead on the permitting process and ready to move forward.
Well, and that again is something that I'm hoping we're going to discuss as well. Just on the point of, I'm just reminded you said you essentially floated the company. Do you or anybody else directly involved in the management of the company personally own a royalty on the project?
No, no, we
Good,
don't.
good.
The royalty, we've got 508 mineral claims. Out of the 508, 128 of them have royalties on them. And that's a 2% NSR royalty. It's a conventional royalty. And we have the option to acquire 1% of the 2% for $1 million US. When I acquired this asset, I acquired it from the bankruptcy estate of Midway Gold Corporation. And at the time, there had been an old school index royalty on the asset that went to 7% NSR at a $700 gold price. Obviously, the royalty had been around for a few years, but that level of royalty burden had actually shelved the project historically.
Mhm.
And that's why I was able to pick it up for pennies on the dollar.
Yeah, and I guess that. Well, I'll get to the history a little bit here, maybe in a second. But I think that about does it for the smell test. Maybe I can move on and talk about or ask about the business strategy here, and essentially ask you how you plan on making shareholders money from here on out. And to put it simply, do you want to build this asset, or are you looking for someone to buy it off of you?
The answer to that is yes. Um, Look, I've always approached my projects from the viewpoint that I'm going to build them. And I've built about 8 mines in my career. Um, the bottom line is that if you don't approach them that way, you're never going to be taken seriously. So whether I sell the asset or build it myself, I'll only sell it if it's accretive to the overall shareholding. Um, Now, the greatest way you build accretion in this business is you can either discover a project, and this one was already discovered, so that wasn't an option, or you can take a project through the permitting stage, and it's the other half of the Lassonde curve. It's the back half where you get the greater value than you do on the exploration hit. And that's what most people ignore because they've been trained to do that by the letter writers and, Bay Street. But that's where you gain your greatest value. Now, permitted assets in this part of Nevada, and I can point to the recent acquisitions by Anglo American, by Centura Gold in our district. They were paying between $100 and $170 an ounce for permitted resource ounces on the four acquisitions done in the last 3 years. And those ounces, and some of them are quite a bit smaller than ours, are highly accretive to shareholders. We're currently trading at about $30 an ounce. So that's between a 3 and a 10-time multiple from where we're sitting. That's how you gain value for shareholders.
Who do you think this asset fits with, though? And again, this is going back to the size that I mentioned there, that it's not a big asset. So if there was a potential acquirer, and I understand that's it's forward looking here, we're in the hypothetical realm, but who does this asset fit with?
Well, let's step back about production reality. Now, the last open pit mine I built was the Briggs mine in California. We started that mine with 370,000 ounces of reserve. And we actually closed it after mining 980,000 ounces. That's production reality. This pipe dream of trying to drill out an entire deposit before you do anything, well, that's a way to make Bay Street quite wealthy, and that's what they promote. That is a construct. If you're going to build operations, you need to drill enough to justify your mine and then get it into production and drill from cash flow after that. Now, our deposit would produce enough gold in the 7-year mine life. In today's market, that gold production would have a valuation of about $1.5 billion. And of that amount, the capital load is about 15% of that total for the construction capital. So, look at your math. Don't look at the ounces. Look at the math of the cash flow. Mm-hmm. That's where you gain true value for shareholders.
Well, so here's the thing that I'm thinking about in that case when I hear you saying that, James, is that this doesn't sound like a complicated strategy here. It doesn't sound like complicated math. Even I could do it. How come nobody's done it already on this project, though? So I guess this might be a good point for you to talk more about the history of the Tonopah project. And if it's as good as you see it becoming, how come nobody beat you to it and built it already?
Well, we're over 50% institutionally held. Somebody's done the math.
Yeah. Boys, nobody built the project yet, though.
Well, it needed a lot of work. And two, not everybody everybody's looking for that multi-million ounce project. That's about realistically, that's about a 1 in 1,000. The type of project I'm building is maybe the 1 in 100 or the 1 in 200 or 300, but it can be a mine, it can be great cash flow, and you can use that as a hub to move forward on. what we're taking a look at this project is it'll have a heap leach facility. 80% of the tons goes into heap leach, 20% into a mill circuit. Well, at the end of the day, after your 7 or 8 year mine life, which is probably likely to be more, closer to 10 years, you then have a paid for process facility. That paid for process facility can be used in a hub and spoke concept for M&A activity in the district. And there's a lot of gold and silver in the Tonopah district. So you have knock-on strategies. It's just where do you start? And as a junior company, you have to make your projects bite-sized so that you can actually raise enough capital to do them.
Mm-hmm.
And so those are really the complexities of doing a simple strategy, but that's the reality. Or I could stop and I could raise another 100 million in equity and spend it all on drilling.
Yeah.
So those are the options. This comes down to pure economic math. And keep in mind, I'm an economist by training as well as an engineer. So I tend to lean towards more the cash flow versus the ounces. How do I turn ounces into cash flow? Because keep in mind, gold is money.
Yeah. Well, you've also spent some money on doing PEAs over the last couple of years. I think you've done 3 since 2020.
Two of them. Two, yeah.
So this is the third one then now, or 2 in total?
No, it was the second one.
Okay. So 2 since 2020. Did you think this is going to be the last one?
Yeah, I'd like to move this project into feasibility because in order to initiate the permitting process, from the feasibility study, that fully describes the impact of the project on the land. Well, you wrap that up in a thing called a plan of operations, and that's what you submit to the government to initiate the permitting process. That plus all the baseline study work. Because the baseline study work is actually the science that goes behind the permits. It's all the proof on the environmental work. And then you have what are you going to disturb? And that's how you start permitting. So the way I view it is over the next year is to complete the feasibility work and as part of that, create this plan of operations and submit that to the U.S. Bureau of Land Management, along with my baseline study work, which we are currently submitting to the Bureau already. And all of that comes together to initiate the environmental impact study, the EIS process. And that's how you get permits in the U.S. It's a very well codified permitting process, but it's key to moving forward. And that's where you truly get the re-rating for the shareholders.
Is that what you think? I normally go back to that business strategy that people tell me about, and I ask, what's the biggest challenge going to be in that strategy of yours? And you've mentioning the permitting process here a couple of times. Do you think that's going to be the biggest risk or challenge that you're going to encounter in that process? Or what do you think is going to be what keeps you up at night?
Permitting is always your big risk, okay, on any project. And so if you're not moving or actively thinking about that, you're not thinking about anything but a drill hole promote. When you're thinking about a real project moving forward, you have to think about permitting.
Yeah. So you think that's going to be the biggest challenge then for you, or do you foresee something else taking, the majority of your time as well?
Well, money raising is always time consuming.
Hmm.
And, investor relations and raising funds for this work is always a key time consumer. But your biggest risk is dealing with the permitting process to move to the next step. And that is why, when it's completed, there's always a big financial reward for doing so because not everybody can do it.
Yeah. I do want to talk about financials, and we'll definitely get to it, as I mentioned. But I want to talk about maybe some of the other potential challenges here, maybe take it kind of step by step that I've noted here as I was looking into Viva, going back to what I said earlier again, Nevada, open pit, heap leach. And the first thing that I'm thinking about is water. And it seems like your project sits in the same groundwater system that feeds the town of Tonopah, which has an almost 2,000 people population, if I've read that correctly. And your PEA also calls this out as one of the risks. What exactly is the situation here? Do you foresee a hydrogeological conflict along the way? And could dewatering and water rights become the thing that slows you down or maybe even stops you?
Water in the Western United States, water is the number one issue. It's the issue that defines most mining operations. And the availability of water as well as the disposal of water. The Right Patch Basin that we're in is one of the only underallocated basins remaining in the state of Nevada. There's a lot of demand on the waters in the state. The town of Tonopah does have well systems in the basin for providing, that's Tonopah Public Utilities. And their pipeline actually crosses our claims, and two of their major production wells are on the edge of our claims. Now, going back in time, our projects in the valley we're in sits on the confluence of major drainages coming down the Walker Lane and water coming out of the Monitor Valley. These drainages are prolific. You know, there is subsurface flow, and pretty well all of the valley floor mines in Nevada experience that. Mm-hmm. And there's a lot of history behind that. The state of Nevada does recognize something called a reinfiltration right, where you can dewater your mine by pumping it out, sure, never touching the water, and then reinfiltrating it into gravels down drainage. So you never actually impact the water supply. So that's one way that you do it in dropping the mine. You know, we are a valley floor project. It will have, you know, the need for dewatering, and that's in our PEA. That was fully costed. And then, you know, interceptor wells to drop a cone of depression under the pit. That's pretty standard. And, you know, in terms of water rights, it's applying for reinfiltration rights. And then we've got a public utility whose pipeline crosses our property. So we can buy commercial water from the town. The town's got water rights that go back into the 1800s. You know, they're first in. So they've got senior rights. They've got huge excess rights, and not all of them fully perfected legally. So we can help with that by using the rights. And, you know, it's a win-win. The town wins because we utilize their water. It's a pay-for system. So there's income. And, you know, all these rural water systems are fairly broke because people don't pay their water bills. So, you know, they really look forward to having a new major client. So I see it as a win-win between us and the town.
Mm-hmm. The permits that you have right now with regards to water, they are all scoped to exploration, as far as I know, and not an open pit mine, right? Which is very different. And so maybe you can walk me through that exactly. What exactly do you need in terms of permits, you know, NEPA, EIS, BLM, state, or whatever, to go from what you're allowed to do now to, you know, actually moving dirt, processing it, hopefully selling some gold on the back of that.
Yeah, we do have an exploration water well on the property where we supply water, and we've got permits for that to pump water for exploration. Um, what we have to do is, as part of our process, we've been doing pump down tests. We've been doing baseline water sampling for over 7 years now. We've been doing all of the science, all the data collection required to create a complete hydrologic flow model in the valley. We have over 36 different monitoring points. These are wells. Most of them are exploration holes that we turned into a well.
Hmm.
Um, and then
How deep is it,
as
by the way? I mean, just because you said most of them are, is that we talking diamond holes, RC, and how deep is the water table?
the water tables in this case is only about 30 meters deep. So it's not a deep water table. And as we abandon exploration holes, we periodically cement in place piezometers down hole for continued water measurement over time. And those work off the telemetry. I can actually pick up the water data on my smartphone.
Mhm.
Uh, so the technology's come a long way there, but it's how do you get multiple uses out of an exploration hole? And that's one of the ways.
Mhm.
So we've turned our exploration holes into the water monitoring system. We've been doing, as we said, pump down tests. That's where you pump the water and you're testing the flow rates in the aquifers, et cetera. So we've got a pretty good idea as to what sort of pump volumes we would need to keep a mine dry, uh, and what to do with the water. So all of this has been a matter of, I've got a really experienced team when it comes to this. We've permitted a number of mines in Nevada over the years. I've permitted three of them now, one in California, and it's always been the same story. It's all about the water. And if you don't understand your water, you haven't done anything. Um,
Yeah.
and so just drilling for gold, that's not enough in today's world.
Hmm. That's absolutely true, especially in, well, pretty much everywhere, really, but especially in the Western United States. Is that
Yeah,
everything that you're telling me here, James? No, go ahead. I thought you wanted to add
yeah, now
something.
go ahead.
I was just wondering if everything that you're telling me here has been properly communicated with the community of Tonopah. Was it 2,000 people almost who live there, or at least officially?
Yeah, I mean, I've actually presented at town board meetings, and we've had members of the audience stand up and support our project. It's a mining focused town, and it's a town that could use good paying jobs. They're scared to death of a monster project coming in, but we've got the right size project for the town. There's limited housing in town, limited resources. So, all of that's got to be considered in the development concept.
So when you talk to them, what are they asking you? What are they asking you about? How does that conversation go?
Well, along the lines, they're worried about housing supply. And basically, among all of there is a group we get together periodically to discuss, different ways to approach housing, and that's all the development companies in this part of Nevada. That's the miners, that's the solar operators, et cetera. You don't want to create a boom time town sort of concept because it has a lot of negative connotations to go with it. So you got to plan ahead for those things. You also have the concepts of there is ample power. Tonopah's got a major substation in it, and then several major lines come together in Tonopah. And then we've got, major transportation, et cetera. There is a major highway that runs through the town. So those aren't really issues. And then it comes down to this water use and water demand in the valleys there. And there's quite a bit of it. I know Anglo is struggling for water for its projects down in the Beatty district. Centerra is going to be looking at water in the Goldfield district. And then, of course, we've got, we'll be looking at water in our area. And Kinross is, they have major water rights up in the Round Mountain district. So, those are all issues that are part and parcel of the permitting process.
Why I'm really asking about the community here, James, is because your business case, depending on kind of building it small and maybe operating a cash flow focused mine, which might make business sense, but does it make sense for the community to kind of take any kind of risks to its water source for what would be a rather small operation? That's really what's on my mind, listening to you talking about this.
Yeah, their water sourcing can be gained upstream from our site, up drainage. And the two major wells that were put in 2012 by the town were both up drainage, and it was based on water data provided by our project. So we showed the town where to find clean water because we've got the information. The water that comes down the Walker Lane drainage has elevated natural arsenic in it. And it failed EPA arsenic standards back in 2012, 10, when they did drop the standards. Um, you know, we um, we would need to move the remainder of the historic well field up drainage, but that's already been discussed. And again, that's a win-win because it goes into cleaner water.
Right.
And that was a primary focus of mine from day one on this project.
Mm-hmm. Well, and you also talk about the TPU, so that's Tonopah Public Utilities, I guess.
Yes.
You call that a logical provider of water. So you just essentially, I assume, have to close a deal with them. What would that look like? What would a potential deal with the town utility have to look like here?
It'd be paid for on volume. How much water you pump, it's just like paying a water bill.
So it's just volume and pricing essentially that you would have to negotiate, right? Or like source, or would anything else come into play as well?
No, that's about it. We may have to provide some upgraded facilities, but again, that's a win-win for the town.
Okay. How far away are you from actually having to talk to them about this?
We've talked about it in the board meetings, town board. So the precursor discussions have already been held.
Okay. So yeah, in terms of timing, what are you thinking?
Well, it goes hand in hand with the whole permitting process.
Right.
Keep in mind, part of the permitting process in the US is extensive public comment.
Right.
So you want to have these things in deep discussion by the time you initiate that process. And the permitting process, the EIS process, has a statutory timeline of about 1 year. So you have to do your technical work and town hall meetings in that timeline.
Mm-hmm. Realistically, going from today, just literally this conversation, to you being fully permitted to actually, pull dirt out of the ground, how many months, years? What are we talking about here?
It's basically from this point forward, I've got a plan for a 2-year process to final permits. That includes feasibility study, plan of operations, permit submittals, and EIS.
Are you basing it on a comparable, or where is that timeline coming in from?
Partly experience, partly comparables.
Who's your comp in this situation?
Well, the comps include the Gemfield project, which is Centerra's project down in the Goldfield district. That was recently, that's been completed over the last few years. I did complete one permitted mine in the Beatty district south of that. It's one of the projects recently acquired by Anglo, the Reward Gold project. I actually took that one from initiation of permits to final record of decision in 18 months.
Hmm.
That was that was almost 10 years ago now, but that was a project that I completed myself. So, like I said, partly experience and partly comps, but you can look at the local comps. There's enough of them to give yourself timelines.
Hmm. That's actually an interesting point because that was under a different administration, though, I assume. But do you think anything would change now in the US under the current administration?
Yeah, the current administration's trying to blow up bureaucracy and accelerate it. That's why I say we've got one of the best permitting windows in my experience right now. Um, I've been in this business for, I hate to say it, but I graduated in the 70s, so it's been 40 years. You know, we've got an excellent timeline. So, really, I'd like to get this permitting process deeply underway under the current administration and grandfathered in place
Hmm.
because it is highly favorable right now to be doing permitting.
Right. Yeah. And I suppose maybe only slightly related to this topic, but I'm also thinking about metallurgy just before we lose kind of the topic of water here. I'm bringing it up because when the Tonopah Public Utility studied their original water well, they found the water had too much arsenic in it, or at least too much for it to
No,
be labeled
that
potable.
yeah, that was EPA changed its arsenic standards back in 2010. And when they did so, they knocked a lot of these rural utilities in Nevada out of standard. Um, so, we've seen it over time is that as measurement technologies improve, the regulators tend to drop the standards.
Hmm.
Um, so, it's a continuous chase down to lower numbers over time. And that's been the history of water utilities. So, as you do that, then you're thinking about, well, cleaner water supplies and or water treatment. In the case of Tonopah Public Utilities, there was a cleaner water supply available, and that was demonstrated through work that came from the Tonopah project. We knew where the cleaner water split was.
Yeah.
Um, but that was a win for the town. Um, the next win is to remove, right now they're kind of blending water and they achieve standards through blended water. And we can further improve that water by moving more of the system up drainage. And, these are not deep wells. They're only probably 100 meters, 150 meters. And, it's about the cost of a large diameter core hole to put in. So moving the rest of the well field up drainage is not a huge task.
Hmm.
Uh, and, that's something we'd probably pay for. But it would guarantee a cleaner water supply and also guarantee that we don't get in each other's way.
Yeah. Why I'm
So
asking where I'm coming from is obviously thinking metallurgy. I'll ask it, but just ore metallurgy essentially for you as well. But I'm also thinking if you would use water that's arsenic heavy for operations, some of it will eventually end up into the solution in the heap, heap leach or
yeah,
the CIL circuit, right? So would
yeah.
that
What
mess
you
up your recoveries or reagent consumption or something else
no,
like that?
no, it wouldn't. You simply adjust for that. The bottom line is it doesn't impact the metallurgy. Um, in mineralized districts, arsenic in the ground is it's ubiquitous. It's everywhere, and that's part of the natural mineralization process, particularly in gold districts. Um, so it's pretty common. You got to keep in mind too that all U.S. mine sites are operated as zero discharge facilities. You don't discharge water that doesn't meet EP, standards. That's why we do so much baseline study work.
Mhm.
So we know exactly what the quality of water was before and what it'll be after. Um, but that's all part of the science of building a mine.
Mhm.
And, it's what most explorationists ignore.
Yeah, that last part specifically, true. That's where I'm coming from with these questions. We can
Yeah.
switch gears maybe here a little bit and talk about money as well. Or another touch point that I wanted to discuss here is the capex. Capex doesn't seem high on first glance, especially relative to most companies I talk to, but it's also not nothing for again going back to the size of the operation that you want to be running here. So your payback is over 3.5 years, and in the base case, do you think capital or capex might be a challenge, finding a way to finance the build out or something like that?
Um, I believe that once you have permits that capital won't really be that much of an issue.
Mhm.
Um, being a gold project, my last gold project, well, the Briggs mine in California, um, I did bring in some equity by doing a merger. I married a little bit of money, but it brought some equity in. But basically, I financed that project. A third of the financing came from vendors. In that case, Komatsu gave me a very competitive terms on a capitalized lease program to buy the entire mining fleet. I was able to buy crushers under the same sort of terms, and that provided a third of the capital. Um, so, and then in that project in particular, I was able to sell prepaid gold forwards. And I sold about 15,000 ounces of gold that was structured as a bond on repayment and sold that in London and Zurich. And that created a big chunk of the project finance. So, I took very unconventional routes and financed the mine. And that was a smaller mine than I'm looking at here. But that mine ran for quite a few years after that. Um, so, gold being money, there's different ways to use that to finance an operation moving forward. And it's not the way that most Canadian companies approach it. These are things that I did learn working for a bullion bank in London.
Um, would you want to finance it on your own? Do you think it makes sense to go for project level partnership or maybe even an equity level strategic?
It all depends on terms. It's not a huge project, so you can't slice and dice it a lot of ways and
Mhm.
still give your shareholders, be accretive for your shareholders. So that's what that's the fundamental thing you always have to keep in mind is
Yeah.
how do I enrich my shareholders at the end of the day? Because they are the owners.
Mhm. But essentially, what it comes down to me, or where I'm coming from with a lot of this, James, is just thinking about how much time it's going to take you. You talked about permitting. You said those couple of years there, and also how much money. So on that topic, how much more money do you foresee having to spend between now and actually, having a kicking off the build out? And I'm not talking about the capex. So let's forget the capex for a second. But between now and the time that you actually have to spend the
Yeah,
capex.
I need to raise somewhere around 5 million US to do the tasks required.
Mhm. How much? So 5 million. How much do you have right now, by the way?
Um, well, we had 1 million on our last report, and our spending this quarter has been quite low, so not too much below that.
Why I'm asking this because timing in terms of financing matters. We're going into December. Nobody likes raising money in December. So just wondering when do you think you might need to go out and raise money? Who do you go out and raise it with? And all those things is kind of what I'm thinking about. Financing strategy for between now and the build out, and also
Yeah,
just
we're
one financing, more financings. All those things are kind of playing around in my head.
yeah, we're currently working on that right now.
Mm.
That's why I'm doing these non-deal roadshows and I'm doing attending these conferences.
Right.
I'm talking to a lot of people, and that's the only way you develop the answer to that question.
Yeah.
Um, and for the type of concept we're looking at, the savvier investors are quite interested.
Hmm.
Um, these are people who know the business.
Hmm. Do you think you're going to have to do a warrant given the backdrop of the market?
Well, warrants are certain people like them, certain people don't.
Yeah.
Um,
People who like
you
them,
know,
they're called bankers. That's right.
what's that?
People who like them are called bankers.
Yeah, but guys who are really truly investing in equity don't like it.
That's right.
So, I've always got that stress, and it depends who's sitting there with their checkbook open
Hmm.
as
Yeah.
to whether I issue a warrant or not. And I have issued no warrant deals in the past. Dundee came in on a no warrant deal.
What is Dundee's involvement, by the way? I did mean to ask that. I mean, at 20%, doesn't seem like your metallurgy is going to need their glass lock business that deals with arsenic. You said you don't need that. So what's Dundee's deal? What do they want with you?
Well, they mainly see a production opportunity and the re-rating that occurs from that. Look, this re-rating that occurs on permits is not new. It's just not promoted much in the Canadian market
Hmm.
because the Canadian market focuses on that first hump, the exploration discovery hump.
Yeah.
When you talk to US investors, they want to talk cash flow and earnings. When you talk to Canadians, they want to talk ounces discovered.
Yeah.
It's difference between the two markets.
Mhm. Yeah. What else are we not? We didn't really talk too much about geology. And I did maybe want to talk a little bit about it. Maybe you come back another time and we talk about it more in depth. But thinking about operational challenges and stuff like that, and how well you really understand the ore body, because what I wrote down, kind of looking into your technical report that you had there, the NI 43-101, you've got 14 modeled faults, and you're also making some assumptions about geometry as well, and it's also under Miocene volcanic cover. So there's a couple of things where I'm like, I've just been putting question marks to them. How well do you actually understand all that, and how challenging is it?
Well, the bottom line is we've got a lot of drilling, and drilling takes away uncertainty. Um, so a well-drilled ore body has less risk than a poorly drilled one. For all those people that are standing up with majority inferred resource, well, that may or may not exist.
Hmm.
Uh, that's a pure risk item. We've got primarily measured and indicated. 86% of our total is measured and indicated. That tells you that it's been well drilled. Well, the drilling gives you the lithology, it gives you the structure, and it gives you the grades. And we can also tell because of density of drilling what the continuity is.
Hmm.
So we can demonstrate good continuity, we can demonstrate our structural model, and we can demonstrate our lithologic model quite well. And it's all a matter of drilling densities. That's why measured and indicated was created as concepts.
Hmm.
It's all about drill spacing. Inferred is way the hell out there. Um,
Yep.
as a mining engineer, I wasn't even exposed to inferred until I got into the Canadian scene, because in the US scene, it wasn't allowed. We only had We didn't have measured, indicated, inferred resource. We had mineralized material and proven probable reserve. That was under the U.S. Scheme. Yeah, it took the more promotional Canadian and Australian markets to create measured, indicated, inferred.
Hmm. No, but in your case, I'm thinking also about how does your pit optimization handle potential faults or fault offsets that aren't yet drilled through? There must be some of those, right? Even though it is well drilled, as you said. What kind of slope or pit wall domains are going to be most sensitive to those structures? That's
Yeah,
that's where I'm coming from.
well, you do in doing when you analyze your pit slope angles, that's what you're talking about.
Yeah.
You're taking oriented core. And
Mhm.
we do have now over 60 oriented core holes in the deposit. And these days, you're using downhole teleview. You've actually got it on camera and you're driving the camera down the hole and looking at the structures. So that all goes into a 3D model. You're also doing testing on the rock as on your core. You're doing coaxial, uniaxial, compressive strength analysis to see what the bearing capacity of that rock is. So all of that's part of your geotechnical analysis, and we do have a report that's been completed by a well-known geotechnical firm out of Tucson, Arizona. They work for me on most of the copper deposits I worked on in the past. So were major pits, but they're globally known, and that was the basis for the pit slope angles in the PEA.
Mhm.
And that was done to pre-feasibility level. Since then, we've done additional oriented core work. We've done additional strength analysis. We've upgraded the lithologic models and the structural models, and all of that will go into a revised geotechnical model for pit slopes.
Well, really, where this came from is those 14 faults, though, and some of them are described as speculative. And just thinking about how confident or how do you even know that some of these faults are not going to offset the ore body in ways that is going to impact your pit design or continuity or something else that you
Well,
can only really know after you start mining it.
yeah, some of that you'll only ever know once you start mining, but you've done the best estimate you can do with the information at hand, and we've done a lot of work on that estimation. Um, and so it's the type of work that you typically don't see at a project at the quote level that we're at right now. But there's been a lot of technical work done on this project. Our PEA, to be honest, could have been, a lot of people would have called it a pre-feasibility.
Hmm.
That's the level of detail we put in it. And I've actually built mines with less data than I've got on this one. Uh, so I feel we're in pretty good shape as far as moving forward. It's all about mitigating the risk through data capture.
Hmm.
And we've captured an awful lot of data on this project, and we haven't rushed at it because we've taken the time to properly understand the project. Once we saw that it had economic potential, that was the PEA, the first PEA. Then we started slowing down and doing a better job of analysis. And
That,
that
that
led to the second PEA.
it's interesting actually that you put it that way, that it's kind of like a PFS level PE. Do you feel like you understand the transition zone well enough between oxide and sulfide? How sharp is that, and
We
how could yeah, go ahead.
This deposit is intensely oxidized, and we really haven't seen any sulfides worthy a note in the deposit. Um, it's very heavily oxidized.
Yeah, how deep does that go? Oxidized.
We've got holes down about 250 meters, and we're still in oxidized material.
Hmm. So like having that Miocene volcanic cover there has not been an issue for any of that, for understanding any of that.
No, no.
Okay. Well,
I mean, it's all drill hole based.
yeah. Geometry then in that case as well. I mean, you feel like you properly understand the geometry, or could the cover, make that more difficult for you as well?
This was a blind discovery. It was discovered through geophysics.
Yeah.
And, you know, the bottom line is we've gained all of our information through drill hole. And, because you can't see outcrops, some of the geos think that puts them at a disadvantage. But let's face it, all deposits are outlined through drill hole and very little of it on the surface expression.
Yeah.
Um, so it's not a disadvantage.
Yeah. It might be good actually to once you have more news about that. I know you're going to need more drilling in the meantime, and hydrogeological potentially and stuff like that. Might be worth it to sit down and just talk geology, or mining engineering at a certain point in the future. Looking
Yeah, I
at,
mean, I've been speaking mining engineering pretty heavily here.
I would be out of my depth anyway, so you could lie to me, James. I wouldn't know it. That makes it easier, I guess.
Yeah. Um, but yeah, I'm a professional engineer and have been for over 40 years. And, I've built mines and I've been a technical consultant specialist. I've been a bank engineer, all the rest of it. And, uh, you learn over time where the bullshit is and where it isn't. And, you know,
Yeah, that's at least half of my job here. That's at least what I'm trying to do. Would you be looking for other projects in the meantime, though, James? Do you feel like you want to build this first and see it come through, or would you be, yeah, trying to do something else as well?
um, basically, when I see companies like ours picking up additional projects, it's usually because they're worried about their existing project and they're trying to shift notice. The answer is, you know, if I've got money right now, I'm going to put it into this project because it's got merit.
Hmm. Yeah, that's that's clear, and it makes sense to me as well. Do you think your G&A might have to go up between now and actually starting on the build out? Because you said, I mean, it is on the lower end, about 60 grand a month on average. Do you think that's going to go up?
Well, I'll have to bring some additional support in, whether it shows up in G&A or project costing is the question. Um, it quite likely I would bring it in as consultants and it would go on to the project.
Hmm.
Um, but the additional project support, until I have a rationale for putting on employees, um, you know, it, when you bring on an employee, it's a cash burn whether you got work or not. Uh, when you bring on a consultant, you send them home.
Yeah. Yeah. What
And
about
so
marketing in that case? I mean, marketing was about half of your G&A. Looking at do you want to increase that, decrease, keep it here? What do you see it?
well, I tend to judge that by need, and the need is how much money do I need to raise? If I need to raise more, I'll put on more marketing
Hmm.
capital, um, or spend more marketing costs. But that's the only time I do additional marketing is when I've got to do raises.
Well, you said you're going to have to do a raise sometime soon. So, and you've been doing more marketing. Are you planning on ramping it up? Or are you targeting a specific group,
Uh,
like mostly US people, or like who are you targeting with your marketing?
right now, I'm targeting Europe. Europeans are very hungry for near-term gold production. They don't understand exploration. They do like production. Um, and so, we're a good story for them. And I had tremendous attendance in Zurich for the story.
Yeah, yeah.
Um, the Canadian market that wants exploration is not as good a market for me.
Hmm. Yeah, that makes sense. That makes sense. I'm sure I'm missing a couple of things, but I also know that you don't have all day here to sit and look at my face, James. So I'll start wrapping it up here. What's the most fair criticism that you've heard of Viva Gold now that you've been pitching the story to, different markets?
Well, some people don't like the size of the deposit. They want the multi-million ounce thing. Okay, I'm the wrong audience. And then other people, they're saying the capital was too high, but their impression of capital is not current market.
Yeah, yeah.
Yeah, mostly the criticism comes out of a lack of current knowledge.
Mm.
Um, you know, the same thing that you got to keep in mind, gold is money. And why is gold worth 4,000 bucks? And what does that mean that the dollar's worth today?
Yeah.
And I'm not talking the Canadian dollar, I'm talking the big dollar.
Real money, not Arctic peso as they call it.
Yeah. So, it just is a demonstration of how badly the dollar was debased over the last 4 or 5 years.
yeah, yeah. What's your most fair criticism of me? What did you come here hoping to talk about that I failed to bring up?
Oh, you've been pretty thorough, so you're doing a pretty good job there. Better than most of the analysts do.
Thank you for saying that. I really do appreciate you saying it. And yeah, I'm interested to keep following the story, and hopefully we can do this again. When do you think the next time is going to be that you and I are going to be chatting? When are you going to have something more material to share with the market?
Um, I think it'll be early in the new year.
Hmm.
As we're uh, uh, raising additional funds and then moving forward on some of these projects. Um, we've, right now I've got a third party consultant taking a look at you know, an independent set of eyes on the exploration potential on the project. Um, he brought the individual brought up a couple points that were kind of like head smackers. Why didn't I think of that? Uh, so, that's positive too. So we may have some discussion along that line. And then, of course, I've been talking with all of my consultants about, costing for the geotechnical work, the metallurgical work, all the rest of it that needs to go into feasibility.
Hmm.
I do have a drill program for final infill drilling, trying to get some more of that inferred material into measured and indicated. Um, and that's simply because in a feasibility, you can no longer use inferred.
Yeah.
So the inferred ounces disappear, and you've only got, then that turns it into proven probable reserve. And, so the after the next study, I do plan to be able to talk reserves instead of resources.
Yeah. Yeah.
And so that's a material step function change for a junior company of this time.
For sure. Yeah.
Yeah. Um,
Yeah.
so that again is a de-risking. A resource is still a resource is a resource. It's not a reserve for production.
Yeah. When's that coming again? When did you see?
That would be next year.
Well, sure, but
But
next year is like it's
yeah,
12 months. What part of it?
really the discussion is once we get some financing in, then it's all the planning around that
Okay. Yeah.
and
Good.
what the work program really looks like.
I've written down, so I'm gonna follow up once you have those news, and then hopefully we can sit down again. But it really has been a pleasure. Thank you so much for sitting down with me,
Yeah,
James.
well, thank you. And yeah, you got questions after the interview, just give me a ring.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."